The Dirty Dozen Tax Scams for 2026. Let's break it down on this episode of the Hawaii Retirement Show. All right, welcome everyone. Thanks for tuning in to this episode of the Hawaii Retirement Show. Today we're breaking down the Dirty Dozen Tax Scams for 2026. This came out March 5th. The IRS reminds taxpayers to watch out for dangerous threats, and they come out with this list of 12 key scams to watch out for, the Dirty Dozen. And it's available on the IRS.gov website. I'll put a link to it in the show notes as well. But I thought this was timely. It's tax season. That's why I haven't been on here putting out too much content lately. Been deep in the weeds with tax season. Hopefully everybody has gotten their documents and is in the process of finalizing their tax return if they're not filing for an extension. And yeah, it's coming up quick here. April 15th is coming up quick. Looking ahead on the show, I do have a couple of guests lined up. I got Jim Saulnier from the Retirement and IRA show. Really looking forward to talking about him, about his retirement planning process, his philosophy and strategy around retirement planning. And then I also have a CFA, Certified Financial Analyst, coming on, Darcy Smoot. We're going to talk about economic cycles, market cycles, in a historical context, where we are and what to expect. So that should be a good conversation as well. Looking forward to both. But yeah, let's jump into our Dirty Dozen here. Tax scams for 2026, what to look out for. I would say a key theme to this whole thing is just understand if it sounds urgent, it sounds easy, it sounds too good to be true, it probably is, right? Another thing to point out is these scams, there's not just for individuals, it's for business owners and it's for other tax professionals or financial advisors if you're listening. We all know we're getting these phone calls and these texts, and it's just these scams never do stop. They don't seem to be getting any better. They seem to be getting maybe a little worse, but we'll go through some of them here, point them out. Some of them are pretty obvious, and I'm sure a lot of you come across these and immediately brush them off. But unfortunately, there must be some substantial level of success here with these people continuing to, fish and scam people for all different reasons, right? Okay, so number one, IRS impersonation via text or email. Okay, so a lot of fake IRS messages. Usually they'll sound urgent or they'll have links or QR codes. And the goal ultimately here is just to steal your info and install maybe some software, malware, whatever it is, onto your system. So just keep in mind, the IRS will not contact you via email or text, right? Usually we're expecting those letters. I think text message, if you get a text message from anybody, the DMV, or I don't know, anything, usually reputable institutions aren't contacting you about serious items via text message. Okay, number two, AI-enhanced phone scams. So we got robocalls, voice cloning, spoofer caller IDs, right? That you can change up their caller IDs, and there's threats of immediate payments or arrest. Just remember, IRS starts with mail, not aggressive phone calls. Okay, fake charities, and this is common, unfortunately, after disasters or tragedies. These scammers will create these fake charities and look for donations and use it for other purposes, right? So scammers take donations and they'll take your personal info. So only donate to verified IRS qualified charities. And the reason that's important as well is, let's say you donate to a charity and there's no, what's the word? There's no ill intentions there, right? It's a good charity. It has a good reason of why it's there. It still may not be a qualified charity for, tax deduction purposes, right? There are certain requirements for it to meet a qualified charity, right? Usually they got to be registered as a charity, as a nonprofit, and to, acquire this qualified charity status, right? You can't just donate to a random organization that just popped up and expect to take it as a tax deduction. But what they're talking about here is just fake charities, right? Falling prey to fake charities. giving your money where it's not going to be used the way you think it's going to be used. Okay, number 4, bad tax advice on social media. That's a big one going around now. Me and Andy Panko, when I had him on last month or a while ago, we talked about all the AI and all the finfluencers, the influencers, financial influencers out there, and all the data that's out there makes it this amazing time to be your own financial professional, your own do-it-yourselfer, your own, take care of your own finances. But at the same time, there's a lot of false or misleading, whether that's intentional or not. There's a lot of false or misleading information out there. Don't get me wrong. There's a lot of great information out there. But a lot of the false and misleading stuff, the tax hacks, these viral videos of false credits and deductions, and, you got to set up this business and you do this or that, right? Obviously, going back to where I started with, if it sounds too good to be true, it probably is. And what happens is, you can get away with this stuff when you file your taxes until the IRS sends you an audit letter, right? And then once you're audited, then, there's penalties or even worse, right? I mean, there's legal ramifications. So, make sure you understand what you're doing. If you just saw this viral video on Instagram or whatever it is, talking about these credits and this slick move you can do to save all these taxes, just be a little wary. And if you do implement it, just understand, if it is in fact wrong, there could be audits and penalties and even, worse, right? Legal ramifications there. So the IRS is the tax authority. It's always good. Go to the IRS.gov or search a topic and put in the search IRS.gov. Or if you're using AI, maybe reference or tell it to reference IRS.gov or per the IRS. Now, the thing with that is you got to make sure it's referencing the right year, right? Because a lot of this stuff with tax law and legislation, it changes, right? We had the Tax Cuts and Jobs Act. We had Secure 1.0. Now we have Secure 2.0. Then we had the big, beautiful bill. And all along the way, the tax law is changing, right? So once you find that it's from a reputable source, primarily go straight to the horse's mouth, the IRS, then you need to decide, is this the most relevant information, right? Because they can be giving you, right information, but it's outdated. It's been superseded by, current tax law, tax legislation there. So bad tax advice on social media, nothing's wrong with it. A lot of good information out there. Just do your research and make sure you verify it before you start implementing any of this stuff, because it can lead to audits, penalties, or worse down the line. Okay, number 5, IRS online account identity theft. So scammers try to access your accounts or pose as helpers, only to create accounts directly through IRS.gov. Okay, only create accounts directly through IRS.gov, right? So if somebody's trying to help you access your account, they're probably just trying to obtain your information, right? So it's always good. It's amazing how many people haven't logged on to their, SSA.gov, their Social Security .gov account, and that's always a good one just to get into and check and look at it, make sure it's correct, and make sure nobody's got into that thing, especially when you're approaching the the ages when you can start to claim your benefit. But also anything related to IRS, if you have IRS.gov, if you have an account to pay estimated taxes or anything like that, just remember, make sure it comes straight from the horse's mouth and nobody is trying to help you or pose as a helper to access your information. Okay, number 6, abusive Form 2439 schemes, right? And what we're talking about here is fake or inflated capital gains credit claims. Okay, so it's often tied to fake or misused entities. If you don't understand it, don't claim it. Okay, I mean, speaking more broadly about capital gains, make sure you have the right form, your 1099-B from your custodian. You'll have your 1099-DIV, your 1099-INT. Make sure you have the correct forms. And just keep in mind, whatever is on those forms that you are sent, whether it's your W-2, your 1099s, any of this stuff, the IRS also receives a copy of these forms, so they know what's on there. You can't pull one over on them and claim this and not claim that. Whatever's on your form needs to be relayed to your tax return in some form or another. If you have a CPA or tax professional, they'll take care of it. If you're doing it yourself on TurboTax or something, I can't speak to that, but they're probably just make sure everything is being inputted, all the boxes, all the forms, and don't intentionally leave out any forms, right? If you say, well, I had an account a long time ago, I don't know if I have a form or whatnot, go check, because again, it can create more problems than it's worth, right? If you're unsure, just go check and get all the relevant forms. Worst case, you file your return, you find out maybe later, I didn't include this form. There's ways around it to correct it. You can amend your return. You can do, whatever it takes to get back on track, right? If you go off track, don't continue off track. It's not a good plan, a good strategy. Get back on track. Get your forms together. What I like to do for forms is you have some sort of checklist, right? And if you don't have this and you do your taxes yourself, or if you see a CPA or tax preparer, enrolled agent, get some sort of checklist. So every year you go through and you check these forms and ask your preparer, ask yourself if you're doing it yourself, okay, what do I need to add or remove from my checklist? And that way each year you come into your, tax season and you collect the right forms that you need. Okay, number 7, moving along, self-employment tax credit scams, misleading claims about large refunds. Most taxpayers do not qualify for self-employment tax credit, and the IRS is actively auditing these. Okay, so with any credits, whatever you're going in for, whether that's the child tax credit, earned income credit, whatever it might be, right? Education credits. The IRS is auditing those things because there is a ton of fraud when it comes to credits. So just make sure you do qualify for the credits that you are claiming. And a lot of the software, if you're a do-it-yourselfer, will kind of prompt you and walk through it. Just do your due diligence. Take a little extra time and make sure things are right. Okay, ghost preparers. Number 8, ghost preparers. Preparer does not sign a return or provide PTIN. Leaves taxpayer fully responsible. If they won't sign, walk away. What this is talking about is like if you hire somebody to prepare your return, which there is a low bar, very low barrier to entry to call yourself a tax preparer. And they prepare your return, but they refuse to put their signature on it or their PTIN. Be wary, right? I mean, they need to put their name on it just as much as you do. You as the taxpayer are ultimately responsible for the return, for the information on the return. But there is some liability to the preparer, right? And that's why they prepare the return and put their signature, or should put their signature, and provide their PTIN, which is the PTIN is just their tax identification number for a preparer, right? So if you have somebody prepare your return, you hire somebody, and you notice they don't want to put their name or their PTIN on it, just be a little skeptical. Why not, right? You're obviously trying to avoid something here. Number 9, non-cash charitable contribution schemes. Okay, inflated valuations of art or real estate, promises of large write-offs. This has a high audit risk. Okay, so non-cash charitable contributions, right? When it's a cash charitable contribution, you need to provide like a copy of the, usually you'll get a receipt from the qualified charity, or you got to provide a copy of the check. When it comes to non-cash charitable contributions, right? Let's say you gave a piece of art to somebody, right? And you're just going to say, hey, I gave you that, fish print. That's a prized possession. That's worth $1 million. It's like, okay, are you sure it's worth $1 million? Or are you just trying to impose a really high valuation in order to generate, a high deduction for the charitable contribution, right? There's a high audit risk, especially when you start doing this stuff. And even if your non-cash charitable contributions are completely legitimate, you're not trying to inflate any valuations, you want documentation, right? You want to include that. documentation. If you don't include it with the return, because sometimes if there's a high non-cash contribution, you got to fill out another form. I forget which one it is. And oftentimes preparers will want to like make copies of the documentation they're getting from the client to accompany those forms, only because what are we going off of here? If you're just saying, well, I donated, all this stuff to Goodwill and it's extremely highly valuable, well, that's just your word, right? And if it gets egregious, or if the IRS is taking a look at your return, they might ask you to come up with like, where did you get these numbers? And so you want some documentation. Anytime you do any charitable contributions, you want documentation from the qualified charity that's receiving it. When in doubt, just keep all those documents. If you have a CPA preparer, just give it to them, and they can, do with it whatever's required to make sure that all your ducks are in a row and everything is in order there. Let's see here. Number 10, overstated withholding schemes. Fake withholdings to generate refunds. IRS cross-checks data leading to delays and penalties. Okay, so again, on your W-2s or whatever it might be, your 1099s, there's going to be a box with withholdings, right? And if you make estimated payments, which are not withholdings, they're estimated tax payments, that's going to be inputted in a separate place, and the IRS knows what you've paid them, right? And when you've paid them. With withholdings, I don't know why. That seemed really egregious to be on there, but if you're overstating your withholdings, obviously that's a big one. And again, with the IRS having your documents, anytime these documents, these W-2s, 1099s, those boxes aren't lining up what they have, I mean, that's a easy target for them to audit and see what's going on there. Okay, number 11, we got two left. Number 11, spear phishing, targeting tax professionals. Spear phishing, okay. Emails posing as clients or document request. The goal is to steal sensitive data. Even professionals are targets. So I guess this one is geared more towards tax professionals. One thing to note there is with any organization now, whether it's a tax preparing firm, CPA firm, right? A financial advisor. There should be some processes in place within these companies to really protect your data. Even if you're doing do-it-yourselfer and you got TurboTax, there's I'm sure there's a ton of encryption and fail safes in place here to protect your data. Spear phishing, I haven't heard that term, but emails posing as clients or documents requests, right? So I guess a client will email a tax professional and ask for information or ask for documents. Last one here, wrapping it up. Number 12, offer in compromise mills, OIC. Overpromising to settle tax debt cheaply. Most people do not qualify. Use IRS tools before paying fees, right? So if you owe a lot and you can't pay it back and you're trying to claw your way back for whatever reason it might be, maybe, you just financial hard times. Maybe it's just something happened and you're unable to fulfill your tax bill. There are IRS tools available and kind of payment plans that you can go through that are legitimate through the IRS to repay your tax debt and get up to speed there. Be wary of, anybody out there who's trying to settle your tax debt real cheaply. They might be trying to take advantage of you. Be careful what you're signing or what you're signing up for, right? Okay, so to close things out here, how to protect yourself. Do not click unexpected links or attachments. Hang up on suspicious calls. Verify information through the IRS.gov website. And work with a trusted tax professional. Even if you're do-it-yourselfer in TurboTax, you still want to do everything else, right? Make sure you got the onus is kind of more on you to do your due diligence, that everything is being inputted and filed correctly. You have all your same forms from last year and everything is going as planned. If something feels off, you can report phishing to the IRS.gov and report scams using IRS tip tools, right? So I'll put a link in the show notes to this IRS.gov website here that has the dirty dozen tax scams. And like I said, always go straight to the horse's mouth. Go to the IRS.gov website if you're confused on, what's going on. I know there's a ton of information there, and it's easy to say as somebody who's kind of works in the field and kind of understands, at a higher level of what is all there. But you just got to be careful when you're just doing a quick Google search or a quick AI search, right? The information can be wrong, and you just want to make sure, take the time, do it correctly the first time, because nobody wants to get audited. Nobody wants to have to go back and amend a return. So yeah, I would say, take the time, do it right. Remember, most scams rely on fear, urgency, or confusion, right? If you feel like you're being pressured or any fear or urgency to fix something, slow down, relax, verify that everything is correct. Don't feel like you got to rush into everything. The IRS is very fair with how they approach things. I know they're often viewed as sort of the bad guy here, and you're going to get audited, and they're going to, make your life miserable, which can happen. But that typically only happens if you made an egregious mistake in the first place. Otherwise, they're pretty, in my experience, they're pretty straightforward and helpful. They're just trying to make sure things are done correctly. That's the whole thing with taxes. You're just trying to compliantly input the correct information so everything is filed correctly, everything is documented, you pay the appropriate amount of tax, right? Nobody's trying to leave the IRS or tip and pay any more taxes than we have to. With that being said, don't try to pull one over on the IRS. That's just not going to end well. So like I said, haven't been putting out a lot of content lately. I am deep into tax season and, doing some client meetings as well. So haven't been able to put out as much content as I would like to lately. But I got 2 guests on the docket here coming up. Don't know when those episodes will come out, maybe in the next few weeks or so. And I'm really looking forward to those conversations. If there's anything you'd like me to talk about on the show going forward, email it over to aloha@hawaiiretirementshow.com, and we'll catch everyone on the next one.
The opinions and statements presented on this show are for general information only and are not intended to provide specific advice or recommendations. Never make any investment or financial decisions based on information offered on this show without first consulting your financial, legal, or tax advisor. All economic and performance information mentioned on the show is historical in nature and is not indicative of any future results. All indices mentioned on this show are unmanaged and cannot be invested in directly. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Lastly, all opinions expressed by Jason Katita and any guests on the show are solely their own opinions and do not reflect the opinions of or are endorsed by ToBA Financial. For Jason Katita, investment advisory services are offered through ToBA Financial LLC, a registered investment advisor offering advisory services in the state of Hawaii and in other jurisdictions where exempt from registration.